we got to maybe the 24th last time. Does that sound right to you?
No, we were on the.
We did the 25th.
Yeah.
We did the 25th. Okay. So here's what we basically have right now. We've got Jay Dunlop and who else?
Tisdale, K. Tisdale, and T. Patrick.
K. Tisdale and T. Patrick. All right. And Dunlop owes us 90. Tisdale owes us
320.
320, and Patrick owes us 75. Right? Okay. Those are our first three entries into our revenue journal. The other thing we did was this. We had one general journal entry over here, and it was on the 25th. So 5/25, we debited supplies, and what's the entry? We did supplies for services. So fees earned goes there, and our amount was 200. Okay, now, since I'm kind of joining in the middle of the game, we had entries up here. You should have them written down for the first, for May 21st, May 22nd, and May 24th. Those should be in there. So I'm not going to go through and write on those again. They should be right there looking at you. So I'm going to pick up in the revenue journal. You just keep working down where you establish your revenue journal. I'm gonna act like it's brand new. So here is the 27th. Issued invoice number 4 to F Mints for $190. So this is on May 27th. Number 4, F Mints, and the amount was for $190. So we have a new person over here. F Mints, 190. Okay? So remember what this is saying. Anytime I record something in the revenue journal, the journal entry is always exactly the same thing. I'm always what? I'm always debiting accounts receivable. I'm always crediting fees earned. Okay? Why is that? Because it's in the revenue journal. That's why. Okay? So, remember we have an accounts receivable account up here. Okay? It's called the controlling account, and all of these are sub-accounts. The sub-accounts have to tie back to the controlling account. Alright? So, on the 30th, 5 went to D Chase, and the amount was $145. So, we got another person, D Chase, $145. On the 30th, here's Tisdale again. K Tisdale, 115. We already have K set up over here, so we'll just add 115 to her account, his account, whoever. And finally, number 7, on 5/31, to T Patrick, who we already have set up, right over there, was for $85. 85. All right, so we get to the end of the month. All right, there's our revenue journal. We're sitting there looking at it. There, all of our entries are sitting there. All of these, you will notice, are posting directly to the sub accounts. All right, that's how it's supposed to work. All right, that's why we have this journal. Remember the reason we have this revenue journal. We can sit here and do this in a general journal all day, but we don't know what. We don't know who. All right, so that's the big advantage here. We can look right here at these sub accounts, and we know exactly who owes us exactly what. All right. There's one thing left that we have to do, and this is going to happen at the end of the month, and this is going to be a theme throughout these special journals. So on 5/31, we have to make an entry, and my number is not going to add up here. Your number will add up because you're going to take all of the entries all 7 entries into the revenue journal into account. If we add these up, and remember this is not, I'm not adding up this, I'm adding up this line of numbers plus my first 3 entries. The total amount should be 1,020. Okay, you with me? So make sure you've got that straight. You know, I realize this does not add up to equal 1,020. We had 3 previous entries from the other day that we have to take into account. All right? So 1,020 is my total. What I have to do now is I have to make a blanket entry into my general journal. Has to be done. Okay? What I have to do is I have to get this amount, 1,020, into accounts receivable. You'll notice it's just in the sub-accounts right now. I've got to get 1,020 into accounts receivable. Okay? So I'm going to debit accounts receivable for 1,020. And I'm going to credit what? This tells you right here. These earned. These earned. Okay? And that establishes on the general journal. Alright? Realize this accounts receivable 1,020 is going to post over here. Alright? And now after I've completed that entry, now what? We add these up. What does it tie back to? Ties back to my 1,020, which is what it's supposed to do. Okay? So, remember, as we talk about chapter 5 and go through these problems, we have to keep a couple things in mind. Basic overall structure, we've got 4 special journals. Alright, up until last time we met, you only knew about one general journal. Everything we did always went in the general journal, this. Okay? Now we have a revenue journal. We're going to talk about a cash receipts journal, we're going to have a purchases journal, and a cash payments journal. We've also got 2 controlling accounts. Accounts receivable is one, and accounts payable is the other. Accounts receivable means what? When I look at this, I know what? Somebody owes me 1,020. This tells me what? This tells me who. When I see accounts payable, I know what? I owe somebody. Okay? And we'll have the same thing. We'll have these sub-accounts down here that tell us what? Who we owe. Alright? So, if you look at problem 5-2A, I don't think we're going to get through all of it today, but we can start. Let me erase all this. We're going to introduce the cash receipts journal. So we're sticking with the revenue journal. I'm going to get rid of this.
At what page?
Should be at the bottom of the page we're on right now.
This is on what journal?
5-2A. Bottom of page 242. Here's what it says. Transactions related to revenue and cash receipts completed by Apeville Architects during the period September 2nd through 30, 2014 are as follows. These are the transactions that we have to journalize. Right? Now, if you go over to instructions on page 243, just look right across the page. Here's what it says. It says, insert the following balances into the general ledger as of September 1. Okay, so what it's asking us to do is make a general ledger, and we'll make our general ledger right here. And we've got cash. We've got accounts receivable. We've got notes receivable. And it also wants us to make this one for fees earned. Okay? Now, it says this. Insert the following balances into the general ledger. Cash, $11,350. Which side? And how do you know? Debit side or credit side? Why?
Because we received the cash. I don't have the book, but this is because we received the cash.
Why?
Normal credit value?
Huh?
Normal value.
Yeah, hold on. should know this should be automatic. Why don't we know this? What is it?
This is normal.
Cash is what?
Normal debit.
Cash is an asset. Assets have normal debit balances. Okay? The balance in cash is $11,350. Accounts receivable, same thing. It's an asset. Okay? Assets have normal debit balances, $14,340. Notes receivable is also an asset. Assets have normal debit balances of $6,000. Why is fees earned 0? Do what?
Still beginning of the morning.
Right, exactly. It's September 1st, beginning of the month. So what? What does that have to do with fees earned? Big deal. Those aren't 0. What's special about that one?
Because you haven't earned any fees yet. You haven't had the first day of the month.
Okay. Maybe I haven't earned any cash yet, but I still have a balance.
Because cash rolls over.
Alright, keep going. This is what? This shows up where?
That's revenue.
Which shows up? Income statement. Which does what? Resets.
Yeah.
Alright, so it's 0. Good. Alright, better. Waking up a little bit. Alright. Now it also says this, number 2. Insert the following balances into the accounts receivable subledger as of September 1st. Now we don't freak out here. Alright? Accounts receivable subledger does what? Ties to the accounts receivable controlling account. Okay? So here we go. And here's sort of what I'm going to make it look like. We've got Mendez. And let's just do, there's no formal way to do this. So Mendez. Mendez balance is $8,230. Nickel, it says does not have a balance. So we won't do anything to that. Ray Hall is $6,000. No, $6,110. And our last person is Shiloh. And Shiloh does not have a balance yet. Okay, so please understand this. All right? The point of all of these, they do what? They feed directly into this. Okay? So theoretically, what should always be the case? If I add up the numbers over here, the balances in these sub-accounts, it should do what? It should always tie back to what's in here, and you can see where we're starting right now. If I add those two up, it does tie back. So I know if I just look at the accounts receivable ledger, I know that I'm owed $14,340. The sub-ledger tells me exactly who owes it. All right? So we've taken care of instructions 1 and 2. Now here's what we have to do. Prepare a single column revenue journal. We know how to do that. We did that last time. We know exactly what it looks like. I'll put it up over here. We need a date. We need invoice. We need customer. And we know that anything we put in the revenue journal, accounts receivable is a debit, fees earned, credit. Alright, so there's that. Over here, I'm going to introduce you to the cash receipts journal. And here's what it says. It says, prepare a cash receipts journal. Use the following column headings for the cash receipts journal. Alright? Fees earned credit, accounts receivable credit, cash debit. It says the fees earned column is used to record cash fees. Insert a check mark in the post-reference column. Don't worry about that. I need you to make one change here, all right, to these instructions. Where it says, use the following column headings for the cash receipts journal. Where it says fees earned, mark out fees earned, change it to other accounts. Okay, just go ahead and make the change to other accounts instead of fees earned. Okay, so here's what our cash receipts journal is going to look like. All of these special journals start with a date. That's always column number 1. The template for this is on page 36. That's why page 36 is sitting there in parentheses. Then we're going to have credit account. Okay, credit account goes right next to date. So date, credit account. Other account to be credited, right there. So other account. Accounts receivable. Accounts receivable. And then finally, what's going to be my debit? These are my credit options. What's my debit got to be? For a cash receipts journal, debit has to be what? Anytime I receive cash, I what cash? I debit cash. Okay, so anytime I actually receive cash, I'm going to use this journal. So time out. What is the difference in these two? This is used for what scenario?
Tell who owes you money.
What transaction, I guess is what I'm looking for. What transaction do I use this revenue journal for?
Fees earned.
How?
Is it accrued revenue?
On account. Okay? These are, we perform service, we don't get any money. Somebody's going to pay us later. That's revenue journal. Okay? We perform fees and somebody gives us cash, then what?
Post to the cash journal.
This. Okay? So, the idea here, the question is, did we receive cash? Not did we perform services or whatever. Okay? If we don't receive cash, here. If we do receive cash, here. Okay? So, here's what we're looking at. First entry over there back on page 242. Here's what it says. It says, issued invoice number 793 to Nickel Company, $5,200. You've seen that phrase before. You've seen that before. We should know how that one works. Okay? Where does that go? When I issue an invoice, that means what? Why did I issue an invoice? Because they didn't pay me. If they paid me, I wouldn't give them an invoice. Right? Okay? So that tells me automatically what? This is services performed on account. They did not pay. Alright, so I go over here to my revenue journal, and here's what I do. September 2nd is my date. September 2nd, invoice 793. Who did I send the invoice to? Nickel. And the amount of the invoice is $5,200. Make sense? Y'all out there today? September 5th. Received cash from Mendez for the balance owed on its account. Alright? How do we go about doing this? Alright, obviously it's cash receipt, so we're over here. Okay? So I need a date. What's the date? Date's the 5th. Now, I've got credit account here, I've got other account credit here, and account receivable credit here. Why is this person giving me money? Because what? Because they owed it. Right? Who is it? Mendez. Here they are right here. Alright? So sometime in the past, in a previous month, maybe August, alright, they had an entry in our August revenue journal. Okay? It said what? We issued an invoice to Mendez for $8,230. Right? Happened back in August. Now we're in September, they're doing what? Now they're paying. Okay? So, how much are they paying? They're paying off their balance. Where do we find their balance? In the accounts receivable subledger. Okay? So we have to find Mendez out of here. There they are. They owe us $8,230. Okay? So we know what? If we did this in a general journal, how would we record it?
Credit accounts receivable.
Perfect. Alright? So, under here, alright, I've got my creditor account here. I'm going to write Mendez. Because that's who it's related to. Okay? And what are they doing? They're paying off what they owe me. If a debit to accounts receivable says you owe me more, a credit to accounts receivable says what? You owe me less because you paid. How much did they pay? They paid $8,230. Right? So under accounts receivable credit, $8,230, and that's a cash debit of $8,230, and that's what an entry in the cash receipts journal looks like. Okay, I have all my detail. I know exactly what's going on. That's the entry. Okay, you'll notice nothing's here. It's okay. Okay, don't force things to be there that aren't there. Our credit is what? Our credit is accounts receivable, and we've got it taken care of. Okay, so the question is always, do my credits match my debits? And they do. Okay, so we know we're done with that entry. Number 6, issued invoice number 794 to Ray Hall. What is this? This should be, revenue journal. All right, we should recognize those phrases and recognize that scenario. September the 6th, 794, Ray Hall.
We need to post that nickel to the.
Yeah, or if you look under the 13th, we kind of post them all together at one time, so we'll get there in just a second. Ray Hall 2,140. And the 13th, issued invoice 795 to Shiloh. Shiloh, the amount was $3,420. All right. Now, if you look under the entry for the 13th, it says post revenue and collections to the accounts receivable subsidiary ledger. Okay? So what this does is it kind of, we sort of get in the habit of the general journal. We do the journal entry and then post. This one you can kind of handle in batches, if you will. You kind of let them build up and then you post them all at once. So what this wants us to do is, we need to update these individual customer accounts, right? Okay? So what do we do here? Nickel, we said what? We have an accounts receivable debit to Nickel for $5,200, so we need to go over here to Nickel and debit for $5,200. Okay? We've got, on September 6th to Ray Hall, we've got 2,140, so we need to go here to Ray Hall and do 2,140. Shiloh, we've got 3,420. So we'll post a debit there. Now, don't forget, we also got what? Somebody paid us over here, right? So that means what? This is an accounts receivable credit. So I got to do what? I got to find Mendez over here. Find their little customer account, go over here and post a credit for $82.30. Okay? Now my subsidiary ledger is updated. Okay? And it matches what I have done in my journal. Okay? Alright. That's all for today. Y'all get out of here. Have a good weekend.